Hello, greetings of the day. I am going to present one video presentation based on subject corporate accounting, and this this video presentation is based on one individual assignment, which title is accounting for income tax. So this assignment aims at explaining the treatment of the income tax as per the income tax law in the books of the company. So basically it explains the whole story of the income tax law in the books of the company. Next, this assignment contains basically, if you consider basically main things, then what is the definitions of few different terms, criteria for recognition of deferred tax asset and deferred tax liability, tax expense in the latest financial statement, comparison of tax expense as per taxable income and accounting income as well, recognition of deferred tax asset, that's the DTA, or liabilities as reported in the annual report, recognition of tax asset or income tax, that's the IT we say normally, payable as recognized by the company, comparison of tax amount shown in the financial performance and cash flow statements, that's the CFS, concept of temporary difference and permanent difference, and what happens inside the company. And if we see at the end, we are going to conclude some analysis and result by the means conclusion, and we are also going to cite the references at the end as well. Next. So now I would like to give basic introduction about the company that we are going to discuss further in this video presentation, and now the suspense is going to be over. The company is Woolworths, which is one of the famous brand in the Australian market. This company is basically involved in the business of supermarket chains and also has its operation in the New Zealand as well for liquor stores as well. This company ranks second in the Australian market after the Wesfarmers in Australia, but it has also the good performance in the New Zealand as a liquor retailer as well. If you see the establishment years of the company, then it's 1924 and has been still delivering and diversifying in different verticals and has been expanding ever since today. The network of the company is very huge. If we see, there are about 196,000 members in all over the world and a total of 3,292 stores in all over the world. If we see some statistical data of the company, then on average the company serves more than 30 million customers per week. So let's see some definitions: accounting profit and taxable profit as well. If we see in the simple terms, then the accounting profit is the income of the company after deducting all the costs from the total revenue of the company. While if we see the taxable profit, it is calculated by adding non-allowable expenses and deducting allowable expenses, and income credited in profit and loss accounting from accounting profit. It is the amount of income on which income tax for a year is calculated. So recognition criteria of deferred tax assets and deferred tax liability. A deferred tax, whether asset or liability, should be recognized in the annual report as per the regulations mentioned in the AASB and the IAS. The deferred tax assets, that's the DTA, can be shown as after emitting it off against the deferred tax liabilities, or can also be shown individually under asset and liability. So if you see the tax expense in the latest financial statement for Woolworths company for 2019, then the tax expense amount of Woolworths Group in financial statement as reported in the consolidated financial performance of profit or loss is $668 million, which comprise of current tax expense of $730 million, prior period tax adjustments of $11 million, and deferred tax is $51 million. So this tax expense of $668 million is profit from operations. Yeah. So let's go for the comparison of tax expense as per taxable income with accounting income. So the DTA as recognized in the consolidated balance sheet of Woolworths Group in year 2019 is $311 million, which is the net amount of DTA of $990 million and DTL of $679 million. The DTA amount is comprised of property, plant and equipment, provisions and accruals, cash flow hedges, while the deferred tax liability is comprised of intangible assets, unrealized foreign exchange difference, prepayments, and other amounts as well. Yeah, so the DTA is recognized in the consolidated balance sheet of Woolworths Group in year 2018 is as showing in here. Yeah, so recognition of current tax assets with income tax payable as recorded by the company. As per the consolidated statement of financial position of Woolworths Group, the current tax payable as recorded in the consolidated statement of financial position in the year 2019 is $84 million, and current tax payable is recorded in the consolidated statement of financial position in the year 2018 is $110 million. Yeah. So comparison of tax amount shown in the income statement with cash flow statement. The income tax expense show in the income statement same as the income tax paid show in the cash flow statements is not same. So income tax expense is the calculation of tax amount for a given period which does not show any outflow of the cash flow or cash, whereas income tax paid is the amount which is paid during the year and is the real outflow of cash from the company to the government. Yeah, so concept of temporary difference and permanent difference. Temporary difference have two types, deductible and taxable. By permanent difference, if we try to learn by example, then the amount paid as a bribe is a non-deductible expenditure, therefore is disallowed as expense. The company has to pay tax on such amount and it will not be reversed, hence it is a loss to the company. Yeah. Insights to CEO. In the annual report of Woolworths Group, the DTA and the DTL were shown separately in the assets and liabilities section. So the same can be netted off against each other and shown as a single balance as either the deferred tax assets or deferred tax liabilities. Yeah. So conclusion here. So with the introduction of the accounting standards regarding the income tax treatment in the books, a major problem was solved as there was confusion in the industry that the recognition of the same. The accounting standards gave the recognition criteria of the DTA and DTL along with the corresponding expenses. So these standards brought purity in the Correspondence Act and the Income Tax Act. In this assignment, the above treatment and the disclosure requirements were discussed in the case of Woolworths Group Limited, and it was found that the company has made appropriate disclosures and the treatment on the same was also accounted properly. So from the above discussion, it is very clear that the difference between the two of three laws will always arrive, but the same can always be reconciled with the help of the available accounting standards. Yeah, so here are the references. The list of references are here which are used in making this presentation. Yeah, so thank you very much, respected sir, and dear all my friends, for watching my video. Thanks once again. Thanks a lot. Bye.